Welcome to October 23rd's Market Hotspot, brought to you by Trade Genius.
Hi guys, today's market is incredibly volatile, and if you're not going to be a predator, you're going to get left in the pit. That's why today's market hotspot will teach you how to be a poised but lethal crocodile, so the market doesn't eat you. Don't be fooled, volatile markets also present traders with great opportunity. Please share all your market ideas and comments on our Facebook page at Trade Genius Page. Before we dive into this week's hotspot, just to quickly refresh from last week, international superpower United States almost defaulted on its multi-trillion-dollar debt. Although United States barely escaped this economic obstacle, the dollar has been weakening across all major pairs. If you missed last week's hotspot, click the video link on the bottom left corner to update yourself. This week, traders are trying to recapitalize on last week's weakened dollar and ridiculous volatility. If you saw the non-farm payroll data yesterday, you would have seen the huge move and initial selling on the USD, but since then, things have begun to slow down. With us today, Trade Genius team member Jonathan shares his concerns and opinions on approaching this explosive market.
Hello everyone. I have to be honest with you guys, all this volatility really is making me freak out. I know that I want to trade the euro dollar, especially since we have the euro data in the morning and US dollar unemployment claims tomorrow afternoon, but I'm not really sure how to go about the technicals and how to open my trades when the market is moving this fast.
Well, that's understandable, but as we mentioned, if you're not going to take this volatility as an opportunity, then perhaps it's time to be more objective, maybe even pragmatic, about the current euro USD and the market in general. Here we can see the fluctuations in this chart over the long term, and you can see specifically 1.36 to 1.38 currently is a major resistance, or what I call make or break zone, as we can see here in the circles. Meaning technically, many times it has reached this price and been subject to selling pressure.
Okay, I see what you're saying in a long-term scale, but all these events are happening tomorrow in a short amount of time, and the market is still moving really fast, and I'm not really sure how to approach this from a short-term perspective.
Well, a very good point. Let's look at this short-term chart. We can see a number of contributing factors here, which objectively support the longer-term resistance level also. For starters, there is a diminishing trendline channel here, which is squeezing into some sort of breakout point at the top, and also touching the resistance line, meaning either side is going to make a move soon. This offers traders a chance to enter either way with limited risk, as once the market makes its move, there is not much scope for loss, as either it will crash or fly up from here, which means the market is letting you keep stop losses tight. This brings me on to my next point, which is it is enabling good risk reward. Also, the market seems to be overbought according to this RSI technical indicator you can see at the bottom. As this is over 70, again as you can see here at the bottom of the chart, the RSI strength of buying or selling power is basically being supported by the numbers. What is the RSI? The RSI is showing you that when the market is above 70 level, it is thought to be overbought, i.e. the strength of buying is too powerful, and when it is under 30, it is oversold.
I have to admit, Adam, looking at things from long term first and then switching to short term does help me figure out the market considerably, and I'd like to recap with you in sort of a checklist. So we started by looking at the long term, and we saw that we're testing current resistance levels. Afterwards, we're looking at things from a short term scale, looking at the RSI indicator and seeing, is the market overbought or underbought? Afterwards, we're looking at that diminishing daily channel shape at that make or break point to see what direction we're going to capitalize on.
Yes, and I like it very much. Having a trade plan and a checklist in these volatile markets is crucial before you enter into your trade.
All that is left for now is me doing my daily review and checking on the euro and the USD data, and that's pretty much it, right?
Pretty much. What will possibly help is if we have worse than expected news from Europe in the morning tomorrow and better than expected unemployment results from the USD in the afternoon, this will actually support weakening the euro and strengthen the US dollar. Does that make sense and help?
It does make sense and help, and I really do feel much more comfortable to play in a volatile market. And I know that I can be aggressive like a crocodile. I just need to make sure that my stop losses are tight and that I have fast execution. Alright traders, I know that I have my strategy down, but let's all share and collaborate at Trade Genius Facebook page and let's conquer the market together.